The stock market looks very different today than it did yesterday. What's happening? What does it all mean? Let's dive into it. I'm Jared Johnson. Let's have a peek at the markets and what is going on this week so far. Okay, here is the stock market yesterday. If you guys remember this is April 21st, Monday. Everything was red. There was very few anything positive. It was pretty horrendous. In contrast to today. Here is today. What has changed? Now, of course, we have tariff news is the all-encompassing news, right? Now, if you look and not very hard, you're going to see that everybody thinks this is going to A, cause the worst recession in the world, B, collapse global trade, and C, dethrone the U.S. as any sort of actual economy with any dollar importance and any economic importance. These are all the thoughts that are going around. Well, let's look a little bit at how all this can and may shake out. One of the most important charts right now is this one right here. This is from our good friends at the Visual Capitalist. This gives us a little bit of an idea of just how intertwined countries are with the U.S. Now, we can say, A, the U.S. is a massive consumer. We're the world's largest customer, and that's true. We buy everything. We have the biggest economy. So does everybody want to blow that up and not sell things to us and say, well, forget you guys. We hate Trump. We don't like Americans. Forget about it. No, money talks, and they want to keep selling and exporting all their goods and services to the U.S. Number one. Number two, everybody holds massive amounts of U.S. debt. So in tanking the U.S. economy, that puts huge risk on all these countries. Japan holds $1 trillion. China just shy of $1 trillion. The UK, $750 billion. All through Europe and so on, hold hundreds of billions to trillions of dollars of U.S. debt. So tanking the U.S. and the U.S. economy is not going to do anybody any good. And everybody knows that, right? So we've got that to kind of contend with. Now, remember, when we see that sentiment turns like this is the AAII. And what we've seen is massive bearish sentiment this week and last week, and it just continues to get worse and worse, right? Now, what does that mean for us? What does that mean for the U.S.? Well, if we go back and we look at any of these times, right? This is 2000, this is 2008. I hate to be such a broken record, but I must remind everybody that when the market was down here, and when the market was down here, nobody was like, guys, things are going to be fine. Everybody was like, this is the end of the world, and there's no reason to do anything about it because there's no coming back from this. And somehow we have come back from it every single time. 2000, 2008, we just see these massive recoveries. And if you remember, 2020 was terrible, 2018 was terrible, 2011 and 12, when we thought that Europe was going to default on debt. These were all bad times, and they were all blips on the radar. So what is going to happen in the U.S.? What's going to happen here? We're a large economy. There's a lot of money involved. There's a lot of countries intertwined here. Will trade be worked out? Yes, it'll be worked out. And the other question that everybody has is, when will there be some good news? And remember, the market reacts to news like we react to news, right? When you first hear it, you're shocked. And that was this. This was shock. This was all shock. When the shock calms down, even though there's no actual better news yet, the shock calms down and everybody kind of accepts it and gets used to it. And we call that getting okay with what's going on. It's not quite capitulation, but it's getting okay with what's going on. Now, do we need capitulation here? I don't think we need capitulation. This is where all traders, both retail and professional, say, you know what, we're done. We're not buying the dip, and that's when the market turns around. I don't think we need capitulation. We need the market to be okay with the fact that there's some uncertainty, to digest that, and to move on. And I think that is what we're seeing happen. Now, will there be a retest of these recent lows here in the S&P? Probably, and that's okay. We're traders. We take the risk, and that's what we do. But remember, in long-term views, the few times that the S&P has had any kind of significant dip below the long-term trend, like here and here, both 2000 and 2008, with a little blip in 2020. These times, particularly back here, were different times. This was when stimulus money and the economy and so on were different. Now, we could say that this is a changing regime and that the Fed is not going to step in and fix the stock market. That is very, very possible. But if that is not the case, and the Fed continues to step in and the government continues to step in and stimulate the economy, then going below long-term trends, and we'll call our yellow line here our long-term trend, is very, 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 very uncommon, right? It was the government was not necessarily, there was no Fed put back here. And there was a Fed put in 2008, which is why the market bottomed out 2008, beginning of 2009, and went up nonstop for literally, a decade and a half. Now, if there is no Fed put, then anything below the yellow line, our long-term trend, should be looked at as a fantastic opportunity to buy the dip. But I am saying that the Fed put and that the government put and the Trump put is still in place, and that the federal government is not going to let the economy fall off a cliff. The rest of the world, if you watch the news and you believe the fear-mongering and so on, the rest of the world will be portrayed as, we hate Americans, we don't care about the U.S. economy. But the reality is the rest of the world very, very much cares about the U.S. economy, and that a trade deal will be worked out. Mark my words, stay as bearish as you like and miss the opportunities as much as you like. That's fine. But just know this is the actual world that we're in right now. Now, if you say, okay, the U.S. economy is scary and debt and et cetera, then this is where I come with a trade idea that I think I like. Now, I'm not a major Bitcoin guy. I'll just say that I'm not a major Bitcoin guy, but we will note that Bitcoin is up back in the $90,000 range. Now, I don't buy Bitcoin, I don't hold Bitcoin typically. I've had a little bit here and there, but that's about it. What I do think is interesting as a trade is Coinbase. Coinbase is kind of our largest Bitcoin proxy, I guess you could call it. Now, some might say, well, Strategies, formerly MicroStrategies, Michael Saylor's company, MSTR is the big Bitcoin proxy. And that's true to some degree, but I like Coinbase as a proxy to Bitcoin because it's got a little more exposure, and people don't look at Coinbase as a more expensive way to participate in Bitcoin. It's kind of a less expensive way to participate in Bitcoin. MSTR, that's a more expensive way to participate in Bitcoin, and I don't love that. And that's got a lot of volatility, and it's kind of crazy. So I look at this and I think to myself, look at Coinbase. If we get a little bit of a longer term view, Coinbase went public literally at the worst time possible, kind of middle of 21, peaked out end of 21, went all the way down to $30 a share, all the way back up into the mid 300s. And then what we've seen in Coinbase here is we've seen, kind of these levels holding. About $150 has held pretty well. Coinbase is trading at about 100 in the mid 180s, and that represents around a 50% decline from this recent high here of end of 2024. So I really like stocks that have a lot of potential, which I think Coinbase does. I think crypto is here to stay. I think there's some good things to be done and talked about in the crypto space, but Coinbase is a great opportunity as it's 50% off these highs and holding recent lows pretty well. I think there's some great opportunity there in Coinbase, and I think if you're very skeptical on all things stock market, this is one that has some good opportunity to it. I like this. I think that Coinbase will very easily make its way back up into those highs, and I think there's some great opportunity there. Will Bitcoin make its way back up there into highs? I think so. I think Bitcoin always seems to. One thing that we see heavily correlated here is Bitcoin and gold. If we look at just GLD, for example, we've got gold at all-time highs, GLD certainly at all-time highs, but gold itself Let's look at spot gold here, trading just shy of $3,500 an ounce. That's a big time all-time high. So there has been a pretty tight correlation between gold and Bitcoin. Gold tends to lead the rally and Bitcoin tends to follow the rally. And so I think that there's some good opportunity there. If Bitcoin rallies and does well, Coinbase will also. So I like Coinbase. This is one I'm watching and dabbling in, and I think there's some decent opportunity here. So keep an eye on this one. Whatever your strategies are, I'm not making any trade recommendations, but whatever your strategies are, Coinbase is one to watch. I think we've got some great opportunity here. Remember that when the market dips, all of the naysayers and the negative voices come out and give us 10,000 reasons why it will continue to go down and not recover. Don't get caught in that. That's all that's going to do is miss the opportunity for you to participate in what could be an epic rally in the stock market. So don't get caught up in that. Stick with your analysis, trust the process, and remember that the stock market is just like the rest of us. It likes to be shocked, it gets over it, and it moves on. So that is what we'll be watching. Good luck, everybody. Happy trading. Hopefully all is well for everybody out there. Thanks, guys.